If you have a look at what's happening between Sydenham and Bankstown, it's a very attractive housing pocket where you can still go and buy a decent property for a decent price and get a very good yield.
When people see rates not going up any further and they see that they're flattening out and starting to potentially on the way down, what does this do for the property market? And what does that do for the confidence?
But for an individual, you're looking at about a 10 to 12 grand difference in extra buying capacity. So it's not huge.
But we're back property now, 2025. There's been a rate cut, so I've got the big guns in. I'm going to introduce the ones you already know. We've got Chris Ferris, CEO, Coposit. Welcome back.
Thanks, mate. It's good to be back.
Jason He, the sexiest voice in property podcasting.
Thank you. It's good to be back.
And I mentioned the big guns.
You don't need to put a voice on, man. You've already got...
Oh, okay. I mentioned the big guns from Esho Capital, Mr. Peter Esho.
Gents, great to be amongst you.
I think the expert on all the... I'm keen to learn a lot from you. I, of course, am Michael Carboni. My friends call me Carbs. But let's get straight into it. Everyone's talking about this rate cut. A lot of people were calling for it in the media. I almost wasn't quite... I almost thought, no, maybe next time. I didn't think it was going to happen just yet. Was this expected? I'll start with you, Pete.
I think it was line ball. But they probably thought that the RBA has always had a forward-looking view. It was only recently, over the past couple of years, that they started looking back at the data when they got caught short. But traditionally, if you go back 10, 20 years, the RBA has always been forward-looking. And I think as they look through this year, they say, look, inflation, the job's done. The rest of the world, inflation's cooling. We better not get caught again. We better not get caught flat. So let's move. Let's send a signal to the market. But let's also send a message out there that we're not necessarily going to follow through. So what they do is they call it a hawkish cut, where you cut, but you sit there and you signal to the market that this doesn't necessarily open the door to an acceleration of cuts. So 50-50, and they went one way.
Yeah, of course. And so I guess, does that mean, do you think it'll hold? I mean, I hate talking predictions, but are you saying it potentially could hold for a little while longer, or could we see more movements down throughout the year?
The most honest answer I can give you is I don't know.
Yeah, good.
That's not the answer that most financial people like to give. They like to pretend like they know what's going to happen. I've got absolutely no idea, and the reason for that is because nobody can predict what happens to inflation. But if you have a look at inflation, the basket, so inflation is a basket, right? And if you have a look at the things that have been accelerating, they've been things like insurance. Insurance goes up when interest rates go up, right? Because insurance premiums are priced based on interest rates. Housing has been a big contributor. And late last year, the housing market stopped going up. Didn't necessarily come down, but the pace of increase slowed down. That's going to flow through over the next 6 months. So this basket, a lot of the things that make it up are going to start softening in terms of price increases. And I think the RBA sees that.
Yeah, interesting. We've got, Chris, 15,000 people subscribed to Coposit, downloaded the app, looking at properties. The last few months have been interesting. Agents tell us that people are just waiting to see what happens next. Yeah. We've seen a movement down. What happens next?
Well, I think it's a confidence game, right? We always talk about property being a confidence game, and Jace, you always say a game of finance. But, I think we've had 2 years of rate increases, 2.5 years even, and then a stability period, if you want to call it that. And I think people have been waiting to see that rates have stopped going up and the rate increase cycle has completed, at least for now. And I think that's where they're looking at where the rates are today and saying, well, is that the end of the rate increases and are we on the way down? Is this one of one cut or one of many cuts? But I think that's where I think the property side of things, it comes to a game of confidence. So when people see rates not going up any further and they see that they're flattening out and starting to potentially on the way down, what does this do for the property market? And what does that do for the confidence? I mean, I always talk about confidence within the property market. I think it adds a lot of confidence for people that they can see that rates have topped out and they're now looking at this as maybe the next step. Do I think it means property is going to go up 30%? No, I don't. I mean, when rates were increasing, property was still going up in any case. So rates is not the sole determining factor for property prices. I think we all know that. So it'd be interesting to see what happens from this point of view. But I think a few people that were sitting on the sidelines, maybe this is probably the tipping factor for them to actually say, well, okay, now I need to actually get into the market. Interest rates are where they are now. They might be on the way down. This is the deciding factor for them to actually make a decision to jump in. So giving them confidence to go into the market.
People at least seem to be ready to ask questions again. I know an agent I was speaking to who is selling a product that is very suitable for first home buyers. It's been a tricky period for them, but all of a sudden they're saying, hey, they're getting inquiries again. People are asking about it because they knew, I guess everyone kind of felt that the movement was going to be down. And now they should see some more interest there. So it's very interesting to see what this could look like from a first home buyer perspective, from an investor perspective. Jace, I mean, from a mortgage capacity perspective, what does 0.25 mean for someone looking to borrow?
Yeah, look, it's not much. So we did some calculations. So for an individual, you're looking at about a 10 or 12 grand difference in extra borrowing capacity. So it's not huge, right? So it's not like all of a sudden you couldn't get the loan you need and now you can, and you can buy that dream property. I mean, 10K is still 10K, right? But I think it goes back to what Chris is saying is the confidence. Having that extra borrowing capacity will create some conversations with people because, for example, family, parents, uncles, friends, cousins will be talking about this, saying that, hey, I heard that when rates go down, you get more borrowing capacity, right? And these sort of conversations trigger people to look into it because my main thing is always about, you have to speak to a professional such as a mortgage broker or a lender at the bank to understand your situation, right? And these things are going to trigger those conversations where people are going to make an appointment, schedule a phone call, and then they're going to find out. And I'm not saying that, because of that 10 grand difference in borrowing capacity, it's going to be possible now. It's the fact that they're even looking into it. So making inquiries with agents and having these conversations, they start exploring. And I think a lot of people don't realize that they may have the capabilities to buy property, but they just have given up on the idea. The rates are so high or been influenced that, it's a difficult time at the moment. So if I make a massive financial decision and the rates go up again, I'm making the wrong decision. So I'm just going to sit tight and wait. But now with this topic in the media going everywhere, we're talking about it here. People are going to hear about it. People are going to talk about it at parties. People are going to talk about it at family gatherings. So it's going to be front of mind. And I think people would typically take action. Right?
How much of this rate decision do we think was political? Do we think there was an element of politics? I mean, it's not every first Tuesday. It's every 6 weeks now. We know the election. I'm sure it's going to be called next week.
I wouldn't be surprised.
Mr. Albanese.
Yeah, I agree.
But so how much do we think it was political, the rate decision?
Look, by the time this goes live, we may see an election called, I suppose. Exciting news for fans of the Property Now podcast. We're going to be recording our first ever live episode in front of a live audience. You can be there too. More details are to come, so keep watching over the next couple of weeks and we'll let you know exactly where, when and how you can be a part of it.
I've thought about this. Look, I think not much. I think the whole 20 years ago when an election used to be called, the whole country would stop. Today, if you asked, 10 people on the street, who's the Prime Minister, who's the leader of the opposition, people don't really care, right? I think the whole politics impact on society or confidence wears down. And I think if you ask most people when's the next election, they've got no idea that there's one coming up in a couple of months. Right, so I actually don't think that much because it doesn't fit into the public psyche. The RBA probably considered it, but I think they were more worried about moving too late and the economic consequences of that and being blamed that they screwed up again. So they thought they can probably do a little, wait and see, and better to go early than go too late.
If the next meeting is in April, well, it is in April, and then the election is going to be very close to that, perhaps, and if they needed to cut at some point within this meeting or the next meeting, if it's too close to the election, that's also a problem. Then it definitely looks like it's part of politics. If they're cutting too close to an election or making a decision too close to an election.
But they could have just, if they were really worried about being seen as influencing the election, they could have just waited till the one after, right? I think it plays a factor, but I don't think it was the dominant factor. I don't think they said, let's go now because if we go in April, it'll look bad. Because they have moved during elections before. They moved famously against Howard.
Just before, right?
In 2007, and Kevin 07 came in and flew in off the back of that. So, but I don't know. I don't know about you guys, but it just feels like, people are politically disconnected these days. Disconnected from, state politics, local politics, federal. People are more worried about their livelihoods.
Yeah. I think the general punter would see that, there's a case for both parties as well to say that this is a win for them. The current government could say, this is because of everything we've done. And the coalition can say, we had to do this because of everything you've done. And it's the same argument, but it's politics, I suppose. I've seen someone who I think may go into politics soon, Mr. Mark Boris. He's always very vocal about about rate cuts and what's happening. And a lot of his rhetoric since the interest rate announcement has been that the people forced this. We made it happen. Did we make it happen, or was it another reason? Like, what are our thoughts there?
So this is where I think, I mean, me stopping to buy a bag of bread at Woolies or not having electricity, like I think that's not the big factor for inflation. I think government spending is one of the biggest factors of inflation, and governments have been, since COVID, have been pouring money into the economy, and that's one of the biggest factors for inflation that drives inflation. So I think looking at what we've done individually, maybe it's helped, but I mean, you still got to fill up your car. You're still paying $2.20 a litre. Like you still are paying the normal aspects of your life. There's components, you know, maybe, yeah, okay, you don't do that weekend holiday away or you don't do those little components, but I don't think that's the overall contributing factor that has brought the trimmed mean down to, 3.2%. I don't think that's the
be-all and end-all. That's the argument saying that, you know, they really shouldn't use interest rate just to target that, isn't it? Because it can be unfair that there's things that people can't change, right? You can't not go to the dentist if you need to go to the dentist, but you know, or go to the hairdresser. I think we had an episode talking about that, you know, these things are contributing to the basket of goods and services that's affecting inflation.
You can control when you fill up petrol to a degree, but at some point you have to fill it up no matter what it costs.
Unless you have a Tesla.
Unless you have a Tesla.
Then you're contributing to the electricity.
What sort of difference does this make for mortgage holders, Jace? Like how much
in terms of repayments?
Yeah.
Like so we did some calculations. On an average $600,000 loan over 25 years, you're looking at about a $92 per month reduction. You know, so obviously if your loan size is bigger and so forth, look, it does make a difference, but it's not a, you know, huge significant difference that all of a sudden you can go make another financial decision and go take that holiday because of this rate cut. But it adds up, right? So hopefully with the future rate cuts that's on the cards, potentially that can make a difference. But I also think, you know, going back to the first question around the borrowing capacity, you know, for some investors that have multiple properties, multiple loans, you know, a reduction of 0.25 can be amplified compared to someone who's a first home buyer. Because if you're a first home buyer, really just means that you're getting extra 12 grand borrowing capacity or 25 grand for a couple. But if you've got, you know, 5 loans over a few $1 million, all of a sudden it's a 0.25% reduction in how much the borrowing capacity calculation is. That might open up for you to utilize a little bit more equity and so forth. Right?
Composite Street's biggest fan, Jack Henderson, he said he's got $20 million worth of loans. So for him, it's fantastic. He's probably exaggerating. But for him, I mean, what's that worth? It's quite a bit, right?
Yeah, that's exactly right. You know, so that's where, for us, we're going back and looking at some of our clients that we've done the calculations for, where we know that the borrowing capacity might have been a restriction for them. Right, but most of them, you know, it's not really changing too much at the moment. So it's like calling someone up saying you've got an extra 10K. You know, are you ready to go? It might help a little bit, but most of the time not practical.
Peter, I want to take it back to our Composite audience, right? Like I said, 15,000 subscribers and growing. They're looking to us for education, information. What should they do next? And we can't give financial advice, but you know, if you're in the position that you're looking around, like what are you doing next, and what does this sort of news mean for you?
The best financial advice I ever had was from my 84-year-old grandmother, who never went to school. She couldn't read or write. She got married when she was 16, not by choice. Her first 9 kids all died. And she was talking to me one day. I used to work in the stock market as a stock analyst. And she said to me, what do you do? You know, what's your job? And I said, oh, Grandma, you know, I work as a financial analyst in the stock market. And she said, what's that? She had no idea what the stock market was. I said, oh, you know, it's businesses. And she said, oh, so do you have your own business? And I said, no, I tell people how to invest in businesses. She said, listen to me. She said, buy a house, right? Go and buy a house. And, you know, an 84-year-old woman that's never been to school gave me, in less than a sentence, the best financial advice. So that triggered for me a journey into real estate. And sometimes it's the simplest advice that makes the most sense. If you're sitting on the sideline and you've been thinking about buying a property, but you've overcomplicated it because of rates and grants and this and that, find the best property that you can afford and buy it, because you're buying in one of the world's best countries. You're buying in one of the world's most competitive banking markets, where you have, you know, lending choice. You're buying with clean air, good schools, good everything. You're buying the best of the best. And if you can afford to do so, then just do it.
Well, what great advice. Is she still with us, Grandma?
Unfortunately not.
Well,
but I'm sure a lot of our grandparents would give us the same advice. I don't think it's exclusive to my grandma, right? I'm sure all our grandmas would say the similar thing.
Yeah, 100%. How old were you at the time? Do you remember? So you would have been in the stocks back then?
I was at Morningstar. This was kind of 2008, right before the GFC.
So good timely advice, isn't it?
My boss
Did you get to in 2007, the advice?
My boss said to me, son, you're buying at the wrong time. You wait and see what will happen when the $14,000 government grant goes away and the market's going to fall. And everybody was talking about a 40% decline in real estate prices. And now imagine, buying at Sydney prices 2008, 2009.
There's probably an annual article that goes out on like every year that says there's a 40% drop in property prices going to happen, right? I think that's probably been the case for the last 30 years and it obviously hasn't materialised. I mean, when you look at history, right, history is all you've got to go off with what's going to happen in the future. And I think, 50, 60 or forever, right? Where it's not a straight line, of course, but the average return in property is about 6 or so %, the right properties. So yeah, I mean, it's very good advice when you look at, if you're sitting on the sidelines, it's making that decision, even if you're pre-COVID, post-COVID, now, the
other thing
history
is
says it's going to be
Aussie
higher.
dollar 63 cents. Yeah, so we don't talk about Aussie real estate in Aussie dollars, but the world sees it. So $1 million property is only 630 grand US. Now, why is that important? Because Australia's cheap. Australia's cheap. And when Australia's cheap, there's going to be international buyers, which opens up a whole nother conversation about foreign buyers.
Yeah. We always talk about the Aussie dollar here. Next, he's going to talk about iron ore.
If
He
you
starts
start
talking about iron ore price and oil.
That's an opening for oil.
Jason and I might leave the conversation at this point, and you guys can.
I love talking about oil. I mean, it affects everything, right?
Commodities now.
But I think that's a really good point. The Aussie dollar plays a massive part, and it's affected heavily by interest rates, particularly US rates and Australian rates. It's massive impact.
Well, what does a rate cut mean for the Aussie dollar then? Let's actually dig into that, because it's obviously an important part of this whole conversation.
I think the world is very US centric at the moment. There's a seismic shift in the US. What's happening in the US is they're tearing things up and they're rebuilding. They're resetting, the big reset button. Remember the old computers? Mm-hmm. when you were on your modem and your parents would scream at you, hang up the phone, and then you'd reset your computer and it'd take a bit of time. The US economy is going through that, right? It's just completely rebooting. So the Aussie dollar is insignificant relative to the US dollar because investors want certainty and they're going back in the US. But I think we're the best countries in the world, one of the best countries in the world, and that makes us attractive. So Aussie dollar 63 cents, screaming bargain.
We're probably one of the luckiest as well, purely from a geographical location.
Yeah.
I mean, you look at some other countries where they're stuck in conflicts forever, right? Hundreds of years of conflicts purely by geographics. So when you talk about how good Australia is, I think the location of it itself provides one of the biggest.
We've got no neighbours.
We've got no neighbours. So that provides one of the biggest benefits from a security and safety point of view. So that I second that in terms of the country here. Even we can complain about their governments or whatnot, but they're still relatively sound either side, right?
The US spends trillions of dollars protecting its borders because they've got land borders with Mexico and Canada. And then if you look at the UK and Europe, that's all open borders. They're all fighting each other all the time.
You look at the Middle East.
If you look at the Middle East, when you look at us, we don't need to spend hundreds of billions of dollars fighting our neighbors because it's in our national anthem. We're surrounded by water, right? So because we're not wasting that money, we're putting it back into things like the NDIS, like schools, like hospitals, and it improves our standard of living.
To be fair, our government is spending $600 million on an NRL club to stop potential.
Yeah, but that's footy.
That's footy, so that's fine.
That's allowed. So that's another team we can beat. Yeah.
That's good for the mental well-being. Yeah,
but it's not billions.
But that's cheap. Yeah, that's still cheap.
Exactly. Peter Volandes, well done. Guys, where else do we
get your head out of footy, mate.
Footy now. Footy now.
So what do you think's going to happen with property, Carbs?
Look, I think a lot of agents I speak to think, oh yeah, one interest rate cut and there's going to be a boom. I think that's wishful thinking on their behalf. Look, I think it's business as usual. For me, I always go back to a personal level. What does this mean for me? I've got a little bit more money in my pocket. I actually want to be saving that, investing that, rather than spending that at the moment. And hopefully things can sort of get back to a good, from a I guess economic standpoint, that we have a good year here in Australia. I think the market will keep doing what it does, and maybe in 20 years' time, we'll sit back and someone will say, "Oh, my grandfather Peter told me to buy property, and I did, and it went up astronomically." Because we always. I think every generation has always said, "Oh, it can't possibly be better than it is now, or more expensive than it is now," but it always finds a way to be. So I'm just here for the ride. That's just me. There you go. Anyone else? Do you want to round us off as well?
Not after that. Jeez, that was awesome.
I want to give final word though to our guests, because I feel like we haven't even unpacked half of your brain here yet. Like you've said some gems, and what I love is you've broke it. Always given the response has always broken it down most simply. Like, what should you do? Oh, my grandmother said this, or what? Like, it's been fantastic. So, any final thoughts on what's happened, where to next, and what this all means?
Simplicity is the ultimate sophistication. That's not my quote, but, keep it simple. I think there's some great value. We don't necessarily see it because we've got a hometown bias. We know the areas that aren't nice, the roads that aren't nice, but stand back for a minute and pretend like you're a tourist that's just landed in your city, wherever you're living in Australia. Driving down your street, seeing your shops, seeing your schools, your hospitals, and how they would perceive Australia.
I love that.
And then with that in mind, I think Sydney is I'm a Sydney snob. So I still think Sydney is a great city. There's a lot of value. People have given up Sydney, but I see so much value in Sydney. For example, if you have a look at what's happening between Sydenham and Bankstown, you have one of the biggest pieces of infrastructure being laid out. And then if you have a look, if you start at Bankstown and you have a look at the hospital there, the university there, you're in between two international airports and new metro coming, and then you work all your way up to Sydenham. That's a very attractive housing pocket where you can still go and buy a decent property for a decent price and get a very good yield. So yeah, take the blinkers off and appreciate what we've got, because we do really have it very, very good.
And how do you see it affecting Esho Capital?
Look, we're basically an opportunistic business. There's a lot of, again, it comes from optimism. Because we've got a great country and a great model and a great market. I actually think that Western Sydney is a huge growth story. Western Sydney is the third largest economy in Australia, $150 billion GDP, and Western Sydney is going to transform into an economic powerhouse. So we want to be a part of that. We want to be part of the projects that go up and the innovation that happens there.
I love that. How can people follow you, Peter?
Just Google me. You can stalk us online, and I'm sure you can't miss this head.
We'll get you back in 6 weeks for the next announcement.
I'll be humble too. Thank you.
Thanks for joining us. Thanks, guys. We'll see you next time.
Thanks, guys.
Cool, thank you.
The Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and they are general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.